Hey everybody, Boris, Forex. Welcome to our weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for September 10th to September 14th, 2018. And the story in the COM dollar land is decidedly more negative than it is in the majors land. The COM dollars are really taking the brunt of the hit for all the trade war worries. Aussie now is at multi-month lows, Kiwi is at multi-month lows. Dollar CAD, of course, is twisting in the wind as everybody awaits the NAFTA negotiations resolution, which still has really not come to any kind of a firm deal. And all of that is putting pressure very much across the board to COM dollars to a level technically that we haven't seen in quite a long time. So the levels have really moved down. In the Aussie dollar, we're now at 72.70. Support now becomes 70. And if we look at the charts, it's really not full support until 68. Dollar CAD still bouncing in this 32.30 level. But the question here is, of course, going to be much more headline driven. It's really not driven by fundamentals, although we had a sort of a double whammy. We had positive US data, negative CAD data on Friday, just adding to the woes of loony longs. But at this point, the trade really is just centered primarily on what the NAFTA resolution will be. So we have more negotiations. We'll see if there's any final conclusion here this week, but it's very much a headline-driven trade. And Kiwi dripping lower and lower and lower, also at multi-month lows. We'll take a look at that. 65 is a key level, but then underneath that, it really doesn't come until about 63.50. So very important to notice that we're now making fresh lows in the COM dollars. And as a momentum trade, those look to be the most vulnerable to the downside. Don't have too much data on the commodity front this week. We do have Australian employment data, which essentially becomes a non-event because it's really not going to have much of an impact on any monetary policy going forward. And then nothing else. I don't even see, I don't think we have any Canadian data of any import. It's really going to be just essentially, yes, not much anything else except the Aussie data as the only critical data on the funder front. So now taking a look at the charts, this is where it gets kind of interesting. Let's take a look at Aussie first. So Aussie broke all the way down to 7100s. That's massively negative, and it's certainly extending. You can see it's pulling away from, it's grossly oversold, pulling away from all its moving averages. But as a momentum trade, it really accelerated the move to the downside. This was really a result of both the positive U.S. data, which now confirms possibility of 4 U.S. hikes this year, meaning the interest rate differential continues to slip away against the Aussie as we go forward. Plus all of this additional pressure on the trade front as the U.S.-China relationship worsens and worsens and worsens. So if we look at the weekly ranges, let's just take a look at the weekly charts here. You can see that now we blew through this. The low here is 71.59. The low here is 71.48. So we took out the lows, the double bottom lows now. We're effectively really, you can make an argument on a weekly chart that now we broke the lows. And I have to go just a little bit sharper. As you can see, what happens next is that the support levels here, it really doesn't come in until basically 70, 69, 50. And then the really hardcore support, the sort of the low end support, doesn't come in until about 68, 68.50. So there's just between here and there, there's 200-300 points worth of downside price action. And certainly, there's maybe 50 to 80 points of downside action to the very critical, psychologically important 70 level. So if you're trading momentum, you got to like this trade. We broke the lows. We have negative risk flows into start of the week. We don't have anything really to support Aussie on the positive side. And if US yields continue to tick up, all of that puts just additional pressure. And if I'm looking here, let me just take a look at back to the dailies. It's just making a case that they're going to take out the 71s and maybe take it all the way down to 70.50 before even a modicum of support as the week starts. So you got to like this trade. This is a low volatility trade, so I would say sort of like a 72 clearly is the stop on this trade. Maybe we get a bounce back for a day or two, but overall, unless we sort of get this incredibly positive piece of news that U.S. and China have made peace and they're not going to do any more tariffs against each other, and the trade tensions dissolve rather than accelerate, which is very unlikely the way things are going. The pressure on the Aussie continues to the downside. And Kiwi, of course, is sort of the mini-me version of the Aussie in many ways. You see the same kind of a story. We now broke the the lows we made in the post RB and Z dovish decision, right? So the post RB and Z dovish decision, the lows were around 65.44. We took out the 65.33s. Now we're really just scraping the bottom on that end of it. Let's just go back to the weeklies and take a look at the weeklies here. You can see that the weeklies, fresh lows, and the support in the weeklies, this is the lows here is around 64.25, basically another 100 points here for the spike lows. And the next, it's really, if you sort of average out, this is 64.25, this is around 63.50, all the way down to 6,200. It's quite a long way, but if you sort of get a blended high probability zone of support here, it really doesn't come in till about 60, let me just make sure I give you the right level here, 64.50, right? So let's just say so there's another 60, 70 points worth of movement to the downside of the Kiwi. And I think, Aussie Kiwi at this point are interchangeable in a sense because they're both getting sold hard on all these risk-off flows as the growth of Asia starts to really calm down, and with the pressure from the U.S. So they are the what I call the drive-by victims of all of these new tensions in the world, and what you're seeing being reflected here very much on the weekly charts is a massive, small rebounds, massive move to the downside. The overall trend here incontrovertibly to the downside, and this construct here sort of very similar to this, two weeks up and then 3-4 weeks to the downside consolidation. So if we take this as 2 weeks up, there is at minimum possibility here 50 to maybe 70 more points to the downside as the week begins. We try to probe it. The fact that we close it at the lows of the week, very negative, and very positive for momentum trade, very negative for Kiwi, very negative for Aussie. Rarely do we close to the bottom and not have any kind of continuity to the downside. Even here we closed to the bottom. The low here was 65.70. The next week the low was 65.44. So there was a minimum of about 25-30 points to the downside. I really think that with 65 in view, it just really puts the Kiwi in the eyesight of the shorts, and they're going to want to take out the 65s at the very minimum just to see how much of a support there is for the trade at that level. And then last but not least, because of course this is headline risk and we really have no idea, this is CADI. CADI really needs to be looked at on a daily basis because it's a day-to-day trade, and you can see the daily basis. It's essentially still contained in this 32.50 zone to the upside, but we get negative news. Let's say we decide to walk away. U.S. just simply refuses to make a NAFTA deal with Canada. The burst to the upside could really be all the way up to the 134s. It's just very negative for Canada from all aspects because if you get shut out from the U.S. markets and oil prices start to come off off their highs of 70, and the labor situation deteriorates instead of accelerates, it just creates a all negative force of nature kind of worst case scenario move, and dollar CAD then simply accelerates all the way through to the 132s, 133s on the way upside. But on the other hand, we get positive news. The move here is all the way down to the 130s. That's really the big support area, and positive news on Canada could really take us all the way down to 130s. But as I said, technically very hard to trade this because it's very much a headline-driven trade. If I'm going to trade commodity dollars this week, I really want to trade the momentum beginning of the week by selling Aussie, by selling Kiwi, and just at least looking for 30 to 50 pips of momentum as the week progresses. That's the, I think, better and higher quality trade in the COM dollars this week. Wish you guys the best luck, best of trading. Boris, over and out.